The backlash against BlackRock.
All roads lead to good for BlackRock.
To your point, though, about BlackRock becoming this absolute lightning rod.
DeSantis, for example, pulling funds from BlackRock.
BlackRock getting its headquarters sacked.
You say here for BlackRock.
An alliance with BlackRock.
We talk an awful lot about BlackRock here on Breaking Points, and they're also the target of numerous conspiracy theories online.
What is BlackRock? This company quite literally owns the world.
Yeah, so BlackRock is an organization, it's a company publicly listed on NASDAQ.
BlackRock runs pretty much the entire global economy.
Well, here's the research more on who BlackRock is, if you don't know.
That's an organization which is funded by all the same people, yeah? So they've got all these different groups that they're funding. It's all about pushing their narrative.
So today we're going to dive deep into BlackRock, their business model, their agenda, the kinds of powers they wield, and if they do, in fact, control the world.
Just a made-up story, none of it's real. Woke up this morning, United States of BlackRock. God damn, my bed sure felt comfy. But we keep it moving, so I got up, went and hopped in the shower, cleaned myself off, made myself a nice cup of coffee, and I was just about to go sit on the toilet when I got a call from my buddy. He's like, yo, we're going on vacation. But he wouldn't tell me where, so I packed a quick bag and hopped on my Harley, drove down to the airport where I checked into my gate, but I had enough time to go grab another cup of coffee. You know me, I keep it lit. But then we hopped on our plane, and shit, we went to Disneyland, baby.
Has your interest been piqued? Well, I hit up Cancel This Clothing Company, who has amassed almost 1 million followers on TikTok in just a few months by covering BlackRock, to help us separate fact from fiction when it comes to this seemingly mysterious Wall Street firm.
When you start from a who owns this company perspective, you very quickly run into BlackRock, because when you start looking at ownership sheets, BlackRock, Vanguard, and State Street, the big three investment firms, are at the top of all of them.
But before we get to anything else, the first question we have to tackle is, how did BlackRock get so big? Well, the seeds of BlackRock were actually sown within the walls of another financial powerhouse, Blackstone. In 1988, Larry Fink, along with 7 others, founded BlackRock as an internal asset management division within Blackstone. Within just a few months, their business had turned profitable, and by 1989, the group's assets had quadrupled to $2.7 billion. Central to BlackRock's meteoric rise are 2 transformative innovations: ETFs and Aladdin, their proprietary trading algorithm. ETFs, or exchange-traded funds, allows investors a simple and efficient way to diversify their investments while reducing risk and costs. Aladdin is BlackRock's comprehensive risk management system, a digital brain, so to speak, that they pioneer to keep track of portfolios and manage risk by predicting how likely it is that a specific investment will fail. Today, BlackRock is the largest of the 3 investment firms, managing nearly $10 trillion in assets, followed by Vanguard at roughly $8 trillion and State Street at $4 trillion. Technically, these assets do belong to investors, the clients of BlackRock, but effectively speaking, BlackRock manages or owns all of these shares. So what happens when the shares of supposedly competing firms are owned by the same few investment firms? Well, it effectively creates what Harvard Business Review calls, quote, a different form of monopoly, which they say harms competition, consumers, and the economy. Just imagine 2 ice cream carts next to each other with different owners. They would either need to lower their price or enhance their offerings to compete for your business. But if both carts had the same owners, they would not be incentivized to cut price, because that would only result in a lower total profit for their investors. This kind of dynamic plays out every day in companies across all industries in the real world. Take supermarkets, for example. Who are the largest shareholders of Walmart, America's largest supermarket chain? BlackRock and Vanguard. Kroger's? Also BlackRock and Vanguard. What about Target? You guessed it, BlackRock and Vanguard. And what's happened to food prices? We've all felt it. It's gone up, up, and away. This same pattern of ownership repeats across every major industry. So what we think of as the most powerful companies in the world, companies like Apple, Microsoft, Amazon, the executives at these firms still have to consult with companies like BlackRock, Vanguard, and State Street before they make any major decisions, since they have such a large share of their ownership. So the point almost isn't the fact that they own every company, it's how such a structure of concentrated institutional ownership impacts the quality of life for ordinary people.
They're deeply intertwined with political power, the political powers that be.
When we talk about power, when we talk about control, there's perhaps no better evidence than being given the ability to choose winners and losers.
What in the world is happening on Wall Street?
2-year no yields went from 190 to 166 in the blink of an eye.
On the NASDAQ, everything and more has been completely wiped out.
It was the worst day on Wall Street since the crash of 1987.
The 2008 financial crisis proved to be a remarkable opportunity that propelled BlackRock into becoming the financial titan it is today, as the firm secured uncontested contracts to take over the assets of major collapsed banking institutions like Bear Stearns and AIG. A similar thing happened again in 2020 when the Fed tapped BlackRock to help oversee efforts to stabilize the bond market amid the economic turmoil caused by the coronavirus pandemic. Now, they didn't get handed the keys by accident. It was all a very carefully and methodically orchestrated plan over time. There is a playbook, so to speak. Campaign contributions, making friends with both major political parties, specifically targeting the House Financial Services Committee, the folks who could potentially cause BlackRock headaches, and of course, employing an army of professional lobbyists. Just how high up in the US government have they been able to penetrate? Well, currently there are 3 BlackRock veterans with appointed positions in the Biden cabinet. Brian Deese, the former global head of sustainable investing at BlackRock, is Biden's chief economic director. Michael Pyle, BlackRock's former global chief investment strategist, is Kamala Harris's chief economic advisor. Let me tell you, those 2 positions do not require Senate confirmation, and they are actually the first duo of the modern era to go from the same Wall Street investment firm to jobs as top economic advisors to the president and the vice president of the United States at the same time. Wally Adeyemo, the former chief of staff to BlackRock CEO Larry Fink, he is now the current deputy Treasury Secretary. And let's not forget, Larry Fink, the chairman and CEO of BlackRock, is a member on the board of trustees of the World Economic Forum.
Let me tell you, it's not through who's the president is. It's who's controlling the wallet. So it's the
And who's that?
The hedge funds, BlackRock, the banks. These guys run it.
This is conjecture, but it cannot be a coincidence which firm, of all firms, was tapped to lead the investment to rebuild Ukraine. You guessed it, Larry Fink and BlackRock. Another data point, in 2021, BlackRock became the first global asset manager licensed to start a wholly owned onshore mutual fund business in China. So do they own governments? Well, it's hard to say exactly what goes on behind closed doors, but I think all the evidence points to significant influence that certainly warrants further scrutiny.
The people who are forcing these companies to Bud Light themselves already have enough money. It's companies like Vanguard, BlackRock, the companies that own major stakes in Target or Disney. So with all that shareholder clout, they can force these companies to do whatever they want. They confess this is what they're doing.
Behaviors are going to have to change, and this is one thing we're asking companies. You have to force behaviors, and at BlackRock, we are forcing behaviors.
ESG, environmental social governance, the woke agenda, or whatever you want to call it, the idea that return on capital shouldn't be the only consideration in an investment. This is definitely a complicated topic because the genesis of this idea isn't based on indoctrination, as some of us have been led to believe, but rather it is a marketing campaign based on deflection. It's meant to give the illusion that a profit-maximizing firm cares about more than just profit maximization. They also care about other considerations like the environment, diversity, sustainability, fair compensation, etc., etc. But the complication arises because there becomes this kind of unavoidable hypocrisy. Does BlackRock have this woke agenda to incentivize companies to diversify the composition and expand the pool of talent beyond just white men? Yes, they do. Not because they care about equality, but because they are trying to deflect from the fact that they also buy up entire neighborhoods that will in effect eliminate the possibility for historically marginalized groups of people to claim a stake in society through home ownership. Can BlackRock really advocate for climate sustainability, net zero by 2030 or 2050 if they just named Saudi Aramco CEO Admin Nassar to their own board of directors?
For the last 5 and 10 years, you saw Larry Fink and you saw BlackRock very aggressively talk about ESG, and in particular climate. In fact, I remember doing an interview with him where he talked about climate and carbon as being one of the central issues of his life. He then gets tortured in the last 2 years by the right. It appears to some degree he is now placating that group, and I imagine may shoot himself in the foot again on the other side. And what I fear is that people are going to think that this firm has just flip-flopped from one side to the other side, and just whatever the wind is blowing today is the way we're going.
And that is the central conundrum for BlackRock's ESG marketing campaign. Nobody is happy. Investors aren't happy because ESG funds haven't been shown to perform very well. Conservatives flaming culture wars, well, they're not happy. And just to make a point, in several states, they've actually pulled their funds completely out of BlackRock. Progressives, they hammer BlackRock for their hypocrisy, and there's a lot to criticize there. Larry Fink, the CEO of BlackRock, recently said he is no longer using the term ESG because it is politically weaponized and he's ashamed to be part of the debate on this issue. The truth is, from my perspective, Larry Fink isn't ashamed of ESG. He's just come to the realization that his marketing campaign didn't work and that it's completely incompatible with the nature of the business that he's trying to run. And the end result is not only that everyone is pissed off, but his firm's bottom line is being materially affected.
You need to assess humans in the space as individuals making their own choices. You need to assess corporations and companies as individual corporations and companies making their own choices.
Evilness is by definition subjective, but here's what I'll say based on the incentive structures in place. BlackRock derives the majority of its revenue from investment advisory and administrative fees charged to its clients. Their entire business model is predicated on increasing the value of the assets they manage, meaning that day by day, year over year, corporations as a whole need to grow, need to increase their value. The rules of engagement to grow in a purely capitalist society, you could like this or you could not like this, but it requires companies to extract the most value they can in every transaction, business to business and business to worker, and give up the least amount possible. There's little to no human consideration whatsoever. The very reason why BlackRock have been able to make a name for themselves in a matter of just 3 decades versus firms that are hundreds and hundreds of years old is because of an algorithm that distills everything down and everyone down to ones and zeros and the present value of all future cash flows. There is by necessity an inherent inhumanity when we financialize and commodify everything, where you and I and everybody else become objects of trade. Now, I think that's pretty darn evil, but again, evilness is subjective and it's up to your own personal values and interpretations. That's all from me this time. What are your thoughts about BlackRock? Sound off in the comments below. If you enjoyed this Beyond the Headlines segment, I would encourage you to check out and subscribe to my YouTube channel, 5149 with James Lee. The link will be in the description below. I really appreciate that, and as always, keep on tuning in to Breaking Points, and thank you for your time today.